Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one very bad week and this is the part of the course as far as volatility is concerned in the Wall Street, and because we are trading in the month of December where the volumes are extremely low and most of the market participants are now enjoying holidays, winter holidays to be specific. So, and more than that, it's not about how much the interest rate is going up or down, and it's all about the commentary what the FOMC is thinking right now. And in this course, meanwhile, they have literally done something which nobody was expecting, or it's not been expected looking at the last couple of years. But yes, the way they are doing, they are about to break something, and probably which has already been broken. Now, always remember that interest rate work as a gravity, and when interest rates are lower, you will see every financial instruments are flying high, and when interest rate going up, each and everything, or the gravity, when gravity start moving up, each and everything comes down. And more specifically, I mean, just this is just an observation. This crypto asset class is going to hurt, and hurt very bad. You have seen some very bad things in the last couple of years, but if the hawkish commentary continues, then obviously you will see more to be seen, and that will be very much bad. And it's not about whether you are buying or I am buying, it's all about whether the big money flows into the crypto market or not. And if it does not, then obviously sooner or later we will fly away, because it's not about valuing a stock which is a process that is already been established, but this is a new asset class and things need to be understood. It will definitely take next 20 or 30 years to get stabilized before a proper market setup will force into play. Now with this, let us see what lies ahead for the market in the next week as far as USA Wall Street is concerned. So let me welcome you to another session of USA Weekly Market Report, and this week I'll going to show you how the trend looks like. It's not about what has happened or what will happen in the next couple of days, but how the overall trend for the important indices, and then again the currency and other important financial data points looks like. But let us start with the important news we have here, if there is any. And you can see beg your pardon, Binance native BNB token falls to the lowest since July as concerns mount about withdrawals, FTX ties. So this is what I have just said, that withdrawals are going to increase because the big money are not coming here. They have they might have already taken out most of the chunks, and retail people at the end of the day, sooner or later, because there is nothing called a floor price for crypto, and it will go into decimals. So nobody wants their money to get trimmed, or losing money 24 hours. This is not the kind of thing people are habituated with. Okay, so be very much aware about what you're doing. And then again, US Treasury's financial stability watchdog says fraud is rampant in crypto markets. So this is another thing which you need to look at. Dow Jones closes more than 200 points lower, fall for a second straight week as the recession fear grows. It is not about recession fears. Understand one thing, we are talking about economic recession, not stock market recession. It is about interest rate. If you just consider that one factor, every other factor will fade away, and you will see. And this is a known fact that interest rate works as a gravity, and if gravity increases, this is a scientifically proven fact, whenever the gravity increases beyond a certain point, you can't even jump from the ground. So if the gravity continues to increase, or if the interest rate continues to increase, or these kind of hawkish stances will definitely causes problem for all asset classes. It won't go up higher very easily until and unless something breaks down, and then you will see a sharp fall as far as the interest rate are concerned, and uh, it's not going to continue for long. It's definitely not going to continue for long, and that's what we have seen in the past. And it is not a market where you can do whatever you have done in 1970 or 1980, and you will push into such a recession. You cannot push economy into such a recession. They have already done it. And where you are going to do QE4, QE5, who knows? Here, because there is a huge amount of debt on the US economy. It's not like you're not going to compare US economy 40 years back and now. And you can clearly say central bank have now given the market a clear message: tighter policies here to stay. So that's what we have discussed. Let us see what else we have here. This is this is a socially important news. Mark Benoff tells Salesforce workers that new employees are facing lower productivity. Okay, so this may not be one company's issue, but it implies to all. So this is also one important thing to look at. Apart from that, Amazon worker will go into formal strike for the first time in the UK. So this is specific to. Okay, let us see what else we have over here which can impact the market. Neobanks battle to lure UK saver with juicy yields as interest rate rockets to a 14-year high. I know it's not about the hike in interest rate, but the pace with which the interest rate is moving higher. And we generally don't compare the percentage of percentage, but if you go back, as far as, let's say, US 3-month or US 6-month yield, which was trading at 0.08 or something, and now it is a 0.025 or something, and now it is trading at 4.25. So if you are looking at the change of pace, it's humongous. Okay, it's like 4,000, 5,000, 8,000%. So this is not a joke. You cannot switch on or switch off any button with which you can move this interest rate. Let us see what will happen. Okay, apart from that, let us see what else we have here. So I think this is most of it, and now we will go back to our most important section, where we are going to analyze all the major instrument and what has happened in the market. Obviously we know that market does it is not at all looking good, and the kind of bizarre fall that we have seen in the market is very bad. And what it has done, actually, let us just what it has actually done has changed or break the short term trend. Whether it will imply onto medium term trend, that's what we are going to analyze in this particular video. So Dow Jones closed 281 points lower, Nasdaq 105 point lower, and then S&P 543 points. Gold is holding comfortably above 1800, so this is quite satisfactory. Oil now trading at 74.5. US yield has fallen, 10-year yield has fallen from 4.2 to 3.4, but this is not the important thing. I'll explain you why. Apart from that, you can clearly see natural gas is holding comfortably above $6, 6.5. So this is quite a positive zone if it does not fall below $6. Apart from that, here we are. So you can clearly see the 10-year yield 3.48% and the 1-month yield 3.8%, the 3-month yield 4.3%, the 6-month yield 4.68%, and the 1-year yield 4.61%. So what does it mean? It simply means that investors are looking uncertainty in the next 1 year, in the next upcoming 1 year, and that's why the short term risk is more than the long term risk, and it is This is simply, and I have showed that chart again and again in the last couple of USA weekly market report session, where I have specifically explained that the inverted head and shoulder indicates recession. It's been indicating for the last couple of months, and you cannot save it because bond market is the largest, and even central bank don't have that power to shift or change that game. So the statement has been written on the wall, and economy will definitely go into recession. There is no denial in that. How stock market behaves may have different views on that. I have my own, you have your own, but as far as the economy is concerned, it has already gone into recession. You can play with numbers, and if you don't think that it has gone into recession, then it will go sooner rather than later. Okay, apart from that, the very important index to be analyzed in this session is US dollar index. So let's start with US dollar index, then we will discuss about the rest of the things, and we will see, and I will show you the trend. It's not about how this is moving, but I will show you the trend, which will definitely help you to understand what's going on as far as the price action is concerned. So just have a look at it. Okay, I'm not going to explain the or not only explain the short one, but also what has changed. So dollar index has made its high near 114, 115, and this was the resistance zone, and then this was your previous trend in between which dollar index has traded and then finally broke down. And right now you can clearly see the levels. Okay, so here we are. You can clearly see the levels as far as the dollar index is concerned. Now understand here what's happening. First of all, you have your stop loss at 103.25 or 103.2. So if the dollar index close below 103, then obviously the downfall will start again, and you will see that the equity market or other financial instrument will go higher. But we have seen one very interesting thing, that even with the hawkish commentary we have from the Fed, the dollar index just moved from 103.5 to 104.84. Okay, 1 point higher. So this is not like otherwise it would have gone up to 105, 106, 107. But anyways, 103 is going to be a stop loss, and the first target on the upside will be 105.78 or 105.8 on the upside. And if it surpasses 105.8, then the dollar index will move in between this range 108.2 and 108.5. So there is still a possibility that the dollar index will stretch up to and move up to this position. Okay, if it does not, then obviously it's a short term market volatility, even though it feels like a correction. But if the dollar index does not move below this point and again falls down, then it means this is a short term volatility, and you will see stock market moves higher. But the correction will intensify if it moves in between 108.2 to 108.5. So this is what we are looking at as far as dollar index is concerned, which means that there is a possibility that dollar index may move up to 3.3%. as far as the potential is there, that it will move 3 to 3%, 3 to 3.3% in the next couple of days or weeks. So this is where the problem is. Apart from that, let's check out the crude, because crude is something that is I would say quite satisfactory right now. It is not at all giving troubles, because otherwise you will see big problems as far as crude is concerned, and crude does not looks good if you go back couple of months. And what I will just show you one important level that will decide, or that will tell you that how you are going to position itself. So if chartically, if crude WTI futures continues to sustain below 77.4, if it does not trade below 77.4, then we are on the right track, and sooner or later the crude will fall much lower than the current price. And right now, if as far as the levels are concerned, on the upside you have 77.4 as your resistance, and on the downside you have 63.2 as your target. So this is the current range, but what you need to make sure is not about 63, but it's about 77.4. And if the crude WTI does not fall, will go up or sustain above 77.4, then we are on the right track. Now let's talk about the important indices, and talking about Dow Jones. Let me show you what's actually happening in Dow Jones, and what you need to look at basically. So this is the fall that we have seen in the last couple of months. Okay, this is the price chart of Dow Jones Industrial Average, and this is how the trend looks like. So if I may draw a line like this, you will see how things syncs up. Okay, here we are, one, and I think here we are. Okay, so this is how the overall trend looks like, and you can clearly see this was your resistance zone, and Dow Jones has literally tested resistance of 34,644, and then it has already broken below 32,888. So it has broken below some important levels on the downside, and I think one more level is left, because it is holding on to its support level. We have to consider it as well. So here we are. Okay, so on the downside, if it holds above 32,700, that's fine, but if it falls below 32,700 as far as Dow Jones is concerned, then obviously it's going to be bad. It's definitely going to be bad for the indices, and if it falls below that, then next support level we have here is 31,000, and hopefully then we have 30,000. Okay, so these two levels will open up. So we need to make sure that it is holding above 32,700, or at least these two lines are your 100 and 200 day moving averages. So things are not at all looking good, because this 1 week fall was very bad, and it has actually changed the short term trend as far as Dow Jones is concerned. Talking about the Nasdaq, which has literally fallen a lot, and the trend is very clear, and if this plays out, obviously we have a lot to lose. Yeah, because Nasdaq is highly correlated with the interest rate, and any change, it is very sensitive to interest rate and Fed policies, and you can clearly see how does it looks like. And if this is the chart that we have in front of us, or if this is how Nasdaq looks like, then you can clearly understand what it's going to be as far as the next move for Nasdaq is concerned. And here we are. If this is the kind of fall, and as far as the chart is concerned, the support that we are going to look for Nasdaq will be in between 7,400 and 7,800. So I mean, this is a very I would say very arrogant or ignorant kind of thing, but what the chart is saying is a sharp fall, like 25-27% of fall is yet to be seen. But for that, we need to make sure that Nasdaq falls below, here we are, 10,200. So if Nasdaq falls below 10,200, you will see fall accentuated, and then it will move towards 7,000 zone will open up, but not before 10,200 will break down. Otherwise this is going to be a support. And as far as the upside is concerned, so the stop loss we have on the upside will be in between 10,260 and 11,260 and 11,990 or 12,000 on the upside. So this is what we have here as far as Nasdaq is concerned. Talking about the S&P 500, S&P 500 has also similar kind of trend if you compare that with Nasdaq, and you can clearly see how the trend looks like. A very balanced index, I would say. It is look much more clean and much more relatable compared to Dow Jones and Nasdaq, and you can clearly see the moves, how does it looks like, and what one can expect going forward. So as far as S&P index is concerned, it is very clear that a big downtrend is yet to be seen. So let us make ourselves clear what we are watching and what one can expect over here. So here we are. So for S&P 500, if it holds the least above 3528, then it is fine. Otherwise, if it breaks below 3528, then the next support range that we are looking on the downside will be in between 2850 and 3000 on the downside. Okay, and on the upside we have 4000 to be look at as far as the upper end of the range is concerned. So things are not at all looking good as far as the trend is concerned. It is moving down and going down quite fast, but there lies an opportunity, and there always a silver lining in the dark clouds, in between the dark clouds, and yeah, there lies an opportunity. So if you find some good stock, I have said this thing previously as well when we have seen such big falls, and I'll say it again, use this opportunity. You need not to trade every day. Use this opportunity to find long-term stocks, and use these big dips to accumulate those, because when things turn very sharp and very quick, and then you do not find, or let's say do not have the courage to buy those stock, and you will miss out with FOMO or whatever terminology you want to add up to. But the thing is, use these dips. You need not to trade, and you not to understand the market on regular basis, but long term trends are very clear. They will give you clear direction. They will show you much better trade to get caught with. And if market stabilizes, whenever market stabilizes, just don't wait, just try to accumulate good stocks. But as of now, the market has changed its course of action, and things are looking very much volatile. So this is the end of the video. Thanks for watching.